Hello everyone, George DeSantis here with a look at the market for the week ending September 2nd, 2016. I hope everyone has a wonderful Labor Day weekend and that we can make some money going into the end of the year. Well, let's start off by reading you the disclaimer as I usually do. Trading and investing has large potential rewards and large potential risks. This video presentation is designed for educational purposes only and is not a solicitation or advice to buy or sell any securities or other tradable instruments. You must be aware of the risks and be willing to accept them in order to invest in the markets. So consult a licensed professional investment advisor for investment advice. Let's start by looking at the monthly chart of the S&P 500 as we always do. So this is the monthly chart of the S&P 500 that I often use. And we can see that nothing much changes over a week or so because each bar here represents a month's data. But it's always good to take a look at the long-term position of the market. And right now we can see we have an uptrend on the monthly chart. The Kalman filter, the yellow line, is above the instantaneous trend line. And in fact, we should note that the instantaneous trend line is now continuing to trend up. Parabolic is below the most recent bar, so there is no indication for a reversal of this uptrend. So the uptrend is in place on the monthly chart. MACD histogram just turned positive. It's slightly positive, 1.56. And that again is confirming the uptrend. We've trended up from below the zero line. And if you read Alex Elder's work, Trading for a Living or the New Trading for a Living, you'll see that he usually indicates that that's one of the best times to be in the market, to be buying the market, when MACD is trending from below the zero line, trending up. At the bottom of the chart, Alex's Elder Force Index is still way above the zero line, so we still have a very strong trend here, uptrend. Let's take a look at the weekly chart. And here's the weekly chart of the S&P 500. On the weekly chart, we are in this trading range, as we can see here. We've hit that almost 2200 level. Remember, we set a target of 2200 from a symmetrical triangle, and we got to 1990 something, 93 or 97. Well, we're still in this trading range. However, last week we had what is called a bullish harami. This is an inside bar or bullish harami. What that means is that the body of this bar, the green body of this bar, is completely engulfed by this red body of the previous month, August. So far, September is showing us a bullish harami. Now, the instantaneous trend line is below the Kalman filter, indicating that we're still in an uptrend on the weekly chart. Now, the parabolic is below the most recent price bar, meaning September's bar. So there's no indication to reverse this uptrend. In the middle of the chart, RSI 12, which I use as a trend indicator as well, we can see that it's still above 60%, and it's been above the 40 and even the 50% level pretty much since back here in February when this trend started. That the lower down, we can see that MACD, although it's trending down a bit, there is really no divergence, which is the most important signal from MACD. And there is no divergence here. The slow average is still above the fast average rather is still above the slow average. So we still confirm the uptrend. And at the bottom of the chart, Williams percentile, with which I use a 30 period to measure momentum, is showing us that the momentum is still pretty strong since it started back here when this new trend started, when it crossed over the 40% line. So the monthly chart is still very bullish. The weekly chart is showing us more signs of bullishness again with the bullish harami. Let's take a look at the daily chart. So here's one of the daily charts of the S&P that we often look at. This one is that 930 approach where we have a 9 EMA, the yellow line, and the 30 weighted moving average. 9 EMA is a 9 exponential moving average, and the blue line is the 30 weighted moving average. Well, what we can see here on the right side of the chart, which is really what's important, of course, is that we had a hammer, a candlestick hammer, meaning that this body at the top of the candlestick is more than twice the size or length of the shadow. Again, we have a hammer here. We had another hammer here. So this would be Wednesday and Thursday. And on Friday, those two bullish hammers were followed by a gap up and a close higher. We also find that Friday's bar hit the parabolic. Parabolic was above the price bars or candlesticks, and now the parabolic hit the price bar hit the parabolic, and what we can anticipate is that the parabolic will once again resume its position below the price bars or candlesticks, indicating that this trend should continue up. So we are now in a position to see if we could hit that 2200 mark and go even higher. Some caution is recommended, but usually when we have this kind of a consolidation after an uptrend, we usually have it as a continuation pattern. So the uptrend continues after this kind of a consolidation in price. Now lower down we have RSI 12, which is one of those trend indicators that I use. RSI 12 on the daily chart, it is not as accurate on the daily chart as on the weekly, but it's still very useful. It came down to the 50% line and is now trending up above it. So RSI 12 is still showing us some strength in the uptrend on the daily chart. Larry Williams pro buying indicator, for which I have the formula here, is very simple. It's the exponential moving average of the close minus the open for the last 14 days. And that has dropped below the zero line. However, it seems to be wanting to capture that and surpass that zero line once more. At the bottom of the chart, Williams percent R hit the 50% line, rallied a bit, hit it again, and rallied a bit. So it appears that the momentum indicator, Williams percent R, is telling us that the momentum is still pretty strong. So on the daily chart, we had some consolidation. We had a bit of a downtrend here, but that was followed by candlestick hammers, which are bullish, and then on Friday, another bullish bar. Let's take a look at another chart, if we will. Let's look at the weekly chart of the NASDAQ Composite. Now, last week and for the last few weeks, we've had these dojis, and it looked as though we are going to roll over a bit and regress somewhere between the instantaneous trend line and the Kalman filter. That hasn't happened yet. In fact, this past week, we saw some bullishness. We saw a bullish engulfing candle. The body of last week's candle totally engulfs the body of the previous week's candle. So it's stubbornly holding its own here, and we're yet to see whether we're going to get more of a regression back down toward the instantaneous trend line. The parabolic is still way below the most recent bar, and the instantaneous trend line is still below the Kalman filter. So the uptrend here is also still intact. RSI 12 on this weekly chart of the NASDAQ is also showing a lot of strength. It's way above the 60% line. And at the bottom of the chart, MACD histogram is still pretty bullish, in bullish territory, above the zero line. So the weekly chart on the NASDAQ Composite is still also very bullish. Let's take a look at the daily chart. And this is a daily chart of the NASDAQ Composite. And I made some notes here. What we see, first of all, is that although the Kalman filter regressed, came back down, price came back down to the instantaneous trend line, seemed to have found support at the instantaneous trend line, which it often does. And in that support, we found some bullish hammers, 2 hammers here, and subsequently, on Friday, we had a gap up and we closed even higher. In addition, so we had these hammers, okay? Now, the Kalman filter is once again above the instantaneous trend line. It's greater than, or it's above the ITL, the instantaneous trend line, the blue line. The parabolic is hit. In other words, this candlestick is now hitting the parabolic, and as we saw on the S&P, and as I mentioned on the S&P chart, this really suggests that next week we should see some indication that the uptrend resumes with the parabolic falling below the current bars. Now, I looked at the because the Kalman filter crossed the instantaneous trend line, it is the first day of a new uptrend. And if you would like, we could take a look at the expert indicator, and it says it right there. The market is currently in an uptrend, upward trend mode. The trend mode is usually characterized by erratic behavior of the phase display and sine wave indicator, which we have on a chart here, which is this sine wave here. The dominant cycle may be changing. This is the first day of the uptrend. Your best strategy is to establish a long position and hold until the end of the uptrend. So there you have it. It simply means that the Kalman filter has now crossed back above the instantaneous trend line, signaling that uptrend. At the bottom, in the middle of the chart here, we have MACD beginning to trend up once more. So we can see that these histograms are getting shorter, just beginning to do so. And as I mentioned so many times, this, according to Alex, is one of the best times to be buying the stock or the indicator we're looking at when MACD is trending up from below the zero line. So this is pretty bullish too. Jerry Appel's sum of the rate indicator, sum of the rate of change indicator at the bottom of the chart is trending back up, but it hasn't given a signal for me to be buying the Qs yet. So I'm still out of the Qs. So in summary, the monthly chart of the S&P and the weekly chart and the daily chart of the S&P are all looking pretty bullish. The weekly and daily charts of the NASDAQ are all in bullish territory now. We can see the daily chart here just became bullish again. So let's look at some other things. Here's that weekly chart of the S&P where I have the Commodity Channel Index, or CCI, indicator at the bottom here. And I use it to trade SSO. I've been doing so for a long time. I told you last week that I've sold half the position since the CCI crossed below the 100% line. I still have half my position, and I won't sell it unless it crosses below the zero line. I might even add to it if we move back above the 100% line. So that's the situation with SSO. Let's take a look at something else. Here's the regression channel on the S&P, and as we can see, it came right down to the 10% line. It appears to be trending up from there. So with that in mind, I think we'll call it a weekend and enjoy the Labor Day weekend. I'm enjoying the tennis. I'm a big tennis fan. And we'll talk to you again next week.